Good morning, everybody. Once again, I apologize for the delay here. Um, let's let's focus on the markets here again. We definitely don't need this distraction here. We have a Bitcoin trading last at 30,675, and as I was pointing a little earlier here, we we seem to have a reversal going on here. Bear with me, please. Let's watch the market here for a little bit. We're getting a move up here in gold, also reverting from the extreme level of standard deviation, as you can see here, of 1795 was our buy trigger today. The low was 1797. It was close enough for us to activate a signal which we are long, and we are recommending clients to trail the position with a stop. Traders in Discord, trail the position with a stop. $18.14 last. Good buying coming in here. Looks like we got some good buying coming in across the board. A lot of activity coming in here, a lot of buying coming in here. Be patient. I think we're getting the kind of a bottom that we've been looking at. Silver is trading 2087. It has turned to the plus, up 11 cents. I think as the street begins to realize what's happening here and the kind of buying that's coming in here, we're going to be getting a lot more short covering on these markets that I believe are extremely, extremely oversold, particularly the Nasdaq. The Dow Jones has suffered the worst 7-week decline in, I believe, about 40 years. So a lot of this correction here was, I believe, liquidation, once again, of highly leveraged accounts, people that basically over-leveraged themselves by taking credit loans to buy Bitcoin, to buy stock. And unfortunately, we have a massive loss. I believe that is close to a 800, 900 billion dollars. The situation here in terms of the food supplies seems to be getting worse as we're going to be moving into the summertime. We haven't yet seen the effect of the problems that we have with supply once again. And the supply chain issues are really beginning to affect the economy in general. For example, the trucking industry is suffering a tremendous amount of shortage of tools that are needed to fix the trucks. And in addition to the increase in the price of oil, for diesel, for example, truckers that were paying about $200 to fill their truck has risen to about $1,000. And it's becoming a real issue. The issue now is not being able to transport whatever commodity is available. You know, it's exacerbating logistical issues with transportation, with maintenance. So I don't believe that we have yet seen the side effect, you might say, that this is causing the whole economy. Food is getting extremely expensive. I think it has risen about 20-30%. I mean, I don't need to tell you, gas in California is over, $6, $6.50 a gallon. And we're talking about sanctions, really, that are not affecting Russia, for sure. They seem to be doing business as usual now with China, using their their local currency by passing the SWIFT and US dollar sanctions. So there is a little bit of a chaos, and that's obviously the reason why we've seen a correction in the equity markets of about 30%. But I believe that based on the, once again, cost of money, if we take a look at the 10-year note, it appears that we have a sort of a light at the end of the tunnel in terms of how or what kind of landing, you might say, this economy might hold. And for the time being, the equity markets seem to be feeling that some kind of, a breath of fresh air, that at least for the next year, for the remainder of this year, for the next two meetings at least, we can see that we're going to be getting about a half a point increase on each. And when we're looking at inflation of the CPI, we're running at 8.5%. We're still running a negative yield on the US dollar. And when you really take a look at the bottom line, if your currency is depreciating of the assets that you hold, even though the assets are gaining, you're not really making any money. And so the dollar is suffering, even though it's rising, basically, against all other weaker currencies like the Japanese yen. But it is not building any intrinsic value. It is imploding in purchasing power. And I really believe that this correction was the best thing that happened. It eliminated a lot of the speculation out of the market because of the high financing at low cost, at zero interest, or whatever, interest rates were at the time, which was historically the lowest levels that we have seen in the last, at least 40 years. And so we're dealing with different dynamics, basically, than when we had back in the 70s, in terms of just the inflation factor in relation to the debt, for example. In the 70s, we didn't have that $30 trillion debt. So we're dealing with a different dynamic in terms of the US dollar. And for all intents and purposes, we're on the opposite side of what Nixon did back in 1971. The dollar has collapsed almost 98%, if not more, against gold, against silver, and which is really the other side of the currency. Prior to 1971, the gold standard was the one that kept basically government from spending, until the light went on in the Johnson's years with Vietnam, and they figured out that if they deviate from the gold standard, then basically they can print as much money as they need to. And that's exactly what got us here. And so we're pretty much on the opposite end of this spectrum here with regards to interest rates. And interest rates, the cost of money, is the stability of the currency. And it reflects, basically, obviously, the strength of the currency. So I continue to support holding on to your long-term positions. I continue to support you guys buying into this correction and trade from the long side on any short-term trading. The best is yet to come, my friends. Enjoy the ride. Be patient. Don't over leverage yourself and stay in the game. We'll talk to you soon.